I mean, if anybody tells you that they enjoy fundraising, they're lying to you, or they're masochistic, or both.
Yeah. Is it not fun because it takes you away from your core business, which is leasing office? Or is it just the hundreds of meetings you have to have? Or like, why isn't it fun?
I think both of those, right? So it takes you away from your day. Like when you start a company, you're like, great, I want to go fix commercial real estate leasing. And you're not like, you know what I really want to do is spend a third of my life fundraising, which is what it winds up being. Now, granted, like, the ends justify the means, right? So you have to now spend a third of your life fundraising. So you do that. But fundraising, you hear no a lot. And there's no way that if you aren't a sociopath, that doesn't impact you.
Yeah.
Even if you know it's part of the game. It's just like dating. Like, I didn't marry the first girl I went on a date with. And I was told no a whole bunch of times, both by her and by other women before that. But it worked out.
Hello, everyone. My name is Chris Powers, and I want to thank you for joining me on the Fort Podcast today. This show is an open-ended discussion and journey covering real estate, business, entrepreneurship, and investing. I would love to hear from you by tweeting me at Fort Worth Chris on Twitter. Hey guys, it's Chris. Thank you so much for joining me today on the Fort. I have Jonathan Wasserstrum with me today, who is the co-founder and CEO of SquareFoot.com, which is a venture-backed company that is changing the way that people find and lease office space. We have an awesome conversation about the early days of the idea behind SquareFoot, how he built the company and raised capital, what SquareFoot does, his take on where office is right now, especially as it relates to the New York City and greater New York area. We talk about where office in general is headed and some of the unique things that are starting to emerge. And we also talk about kind of his second job, which is one of the leading syndicates and rolling funds on AngelList. Jonathan's invested in over 50 startups and has done a remarkable job there. So thank you for continuing to join me and enjoy. Jonathan, welcome to the show.
Thanks so much for having me, Chris.
I'm really excited about today. Let's just start out with a little bit about who you are and your story growing up and what led you to where you are today.
A long list of bad decisions that got me into real estate. Grew up in Houston, Atlanta for college, DC for a handful of years, most of the time at JLL doing capital markets work, which was 2007 to 2010 when I was leaving my job. My first job out of college was consulting. And I was giving my 2 weeks to my boss and he said, "That's cool. What are you going to do?" And I said, "Real estate." And he said, "Have you not looked at the paper recently?" So anyway, spent a few years at JLL doing capital markets work, learned a ton, had a bunch of fun. Plan was always to go back to business school, which I did kind of summer of 2010, which brought me to New York. And shortly after that start, I got a call from a buddy of mine who was looking for space for his last company. And he had gone online to try and do that. Thought you could find space online. You can't. My phone rings. "Jonathan, how the hell do you do this?" And 9 years later, SquareFoot. I mean, 9 minutes later, but then 9 years later, here we are still at SquareFoot.
I love it. Real quick, what did 2007 to what did that look like starting at kind of the height of things and going through the downturn?
I can only tell you about the second part because unfortunately I started. So when it was 2007, it was August of 2007. So the knife was already kind of teetering on the edge, if not, falling. I was like 3 or 4 guys started the same week I did in different groups. And we were like kind of the last in, and then a couple of them, unfortunately, first out by kind of beginning part of 08. So yeah, it was a mess. And look, we were doing capital markets work at the time, and the joke, which wasn't really that funny, but kind of everybody has their gallows humor, is the leasing guys down the hall were still doing stuff. But capital markets completely seized up.
What were you working on? Were you working on a certain asset type? Was it office?
Oh, yeah. So it was actually interesting at the time, now table stakes, but JLL had a group called the International Capital Group, and they essentially had kind of senior MDs in each of the regions, and they each had a junior. So it's the junior. And what was novel, most of 20 years ago now, which was there's a whole bunch of these big trophy assets that were trading that were cross-border nature. So you had Japanese people buying in America, America buying in London, London buying in Dubai. And we inarticulately called it, we looked at the capital flow chart, we called it what are they called? The ballistic missiles? Because it looked just all the capital flows, just like all these lines going across the country, going across the world. Anyway, so we were, for me, it was awesome because I really liked DC, but my goal was never to live in DC full time. And as you know, real estate is a very local business. So for me, I got to be an inch deep and a mile wide in a really good respect. So I knew slightly more than to be annoying about DC real estate, but at the time I could also talk semi-intelligently about all the major capital cities. Because every Monday morning for us, which was 5:30 in the morning, our time, but kind of as we roll around the world, normal times for everybody else, we got on our call with the team and we talked about what we were seeing in each of the markets, who was looking to buy where, who was looking to sell where. So it was awesome. I learned a tremendous amount.
Do you remember any moments during that period where you were like, holy shit, this is going to be really bad?
Well, so we had a guy in the Middle East named Fadi, and in the middle of it, I don't know, so kind of probably end of 8, early 9, I don't know. But if you picked up the paper there and everywhere, the world was just like falling apart, right? And so Fadi would get on the call and say, I have clients that want to buy in New York for 50 cents on the dollar. And my boss, who had his way with words, kind of said, Fadi, if the Empire State Building's for sale for 50 cents on the dollar, it's not making it to your desk. I'm buying it myself.
Yeah.
That's kind of, you had kind of people making those asks, and you just had a complete seizure. So no deals were getting done because that bid ask was just way too far apart, unless, I got to learn at the time what an intercreditor agreement was. And people were trying to figure out where the fulcrum piece on the capital stack was, and that's where you wanted to try and buy into it, or where you didn't want to be just below. So yeah, it was a mess.
Okay, 2 stupid questions. What's the fulcrum piece of the capital stack?
Shit, it was 12 years since I talked about that. So it's if you have, because also like we were dealing with these like big trophy assets, which were not like when you buy like a 200 unit multifamily thing, you have debt. You have your equity piece, and then you have a mortgage on it. Some of these big, like, $500 million assets have more complicated capital structures than that, where you have preferred equity. You can have different tranches of debt. You have like the senior mortgage, and then you can have other tranches of debt. And then, by the way, most of those debt pieces were securitized. So how the hell do you even figure out how to unwind that? So the fulcrum piece would be kind of, if you have a building, we'll use that same $500 million deal. And we believe that 30% of the value is wiped off. You then figure out, okay, that's $150 million. So who owns the building at a $350 million valuation?
Right.
Because it's now their problem or their lucky day, depending on what type of person that was.
Interesting. And then the intercreditor agreement's basically just figuring out who's holding the guarantee, like who do you go after? Who's the person that's going to be foreclosing?
Yeah. Part of that. And also on the other side, if you want to be on the opportunistic side, people who are looking to buy at the time were trying to figure out how, because you want to buy as low and high, I'm trying to think the right way to phrase this, at the right point in the capital stack, right? So that you can be in that position. So you could be an aggressive purchaser and say, great, I'm going to go buy this mezz piece at cents on the dollar.
Mm-hmm.
And that will be when the asset gets marked to market, however it needs to get marked to market, I'll get the keys. And I want to own the keys as opposed to whichever poor fellow was in it at the time who was not in it, thought it was super protected because just like Bitcoin and Tesla, everything always goes up.
Yeah. They will never come back down.
Yeah.
That is so interesting. When I hear international buying and like these huge capital stacks with all these different layers and CMBS notes, and then I just think of attorney's fees and the complication to put these together, I'm always thinking like, I wish I could see the legal bills that come out of transactions like this. They probably would make me vomit.
Yeah.
All right. So then you go and you move forward and your buddy can't find office space and he comes to you and says, I can't find office space, and a light bulb goes off in your head. What happened from that day? What what happened from there until SquareFoot actually launched?
I was in business school at the time. So the summer between first and second year business school, which would have been August of 2011, we hung out in my parents' attic.
Mm-hmm.
I guess proverbially whiteboarding, but I don't think we had a whiteboard. Like started thinking, okay, what should we be building here? What makes sense? What doesn't make sense? And we decided there was like enough meat on the bone to try and do something. So we had a website built kind of that fall, launched it that or end of 11, beginning of 12, and started getting some landlords paying us to list, which was cool. And I don't say we were off to the races, but that's kind of how we started. And then by the time graduation came, we'd made enough progress that it made sense to say, great, well, the downside to me trying this for a little longer is not a very big downside. So let's try. And we just kept working at it. By beginning of 13, we got into an accelerator here in New York called Entrepreneurs Roundtable Accelerator, which was awesome. I'm a real estate guy. I didn't know the first thing about building a company, much less a tech company.
Yeah.
ERA was great around that. Raised a little capital coming out of that in middle of 13. And then kind of, been building since before then.
Did you have a co-founder from the get-go?
Yeah, we had two guys actually. One was that kind of proverbial buddy who called me with the problem, and the third guy was a buddy of his from college who worked in real estate previously as well. And they were with the business until I guess it'll be 4 years ago now. In March, parted ways. March of 2017.
Got it. And so you just kind of bootstrapped it out of your parents' attic until you got to that accelerator and then raised some real money.
Yeah. I mean, when we're working on my parents' attic, office costs are low. Look, I was in business school, so I didn't have income and I wasn't planning on having income. And then, we started raising some capital and taking very low salaries. I mean, shit, I didn't live by myself until I was 34, I guess. I had like 6 roommates here in New York after business school, and I lived by myself for 6 months, and then I moved in with my now wife. So
I love it. You had a new category, WFA, work from attic instead of work from home. And I actually have that question written down. Was SquareFoot.com available when you went to buy it, or was that something you had to pay up for? It seems like a really great domain name.
Yeah, so we were really inspired by our friends at the Facebook, and we started out as the SquareFoot, which we were able to get for like $200, and there was a squatter on SquareFoot.com, so it was not for sale, or for sale, but for a lot more than we were willing to pay. And then, maybe 3 years ago, we bought it for a lot less than everybody would have guessed. But then we also did it in installment plans. But yeah, we became SquareFoot. We dropped it because we were able to get the domain.
And I've really never asked this on another episode, but how did you go about buying it? Did you have to hire a broker, or were you just reach out to this guy directly?
So we used a friend of a friend. I'm trying to remember who it was, but somebody who wasn't directly affiliated with us, because we didn't want somebody hold us over a barrel. There are brokers that do it, but we are a very frugal organization. We weren't going to use a broker, and we were able to get it this other way for a number that we were happy with, and especially we paid for it over maybe a 2-year period.
All right. So what is SquareFoot? What's your take on the business, and how are you all doing things differently?
Yeah. So SquareFoot helps companies solve their real estate needs. We bring transparency to a market that's historically had none, and technology to a process that's historically had none. We do that with SquareFoot.com, which is essentially like Zillow for office space, right? When that first pain point that we had talked about, right? When you try and go see what's available, you can't, right? We in the industry, although not at SquareFoot, but in the industry, you have CoStar. What does a prospective tenant have, right? The same way Zillow exists for apartments and houses, we start with that. We pretty quickly saw that in addition to access to inventory, everybody also wants and needs help with the transaction. So we have brokers. And we enable our brokers with tech, which makes their lives better. We enable our clients to use tech too. There's an app for that, as much as it sounds like a 2011 Verizon commercial. And everybody's life is improved by tech throughout the process. Centralizes everything in a dashboard and a mobile app. So when you're going through the leasing process, instead of a paper chase, it all lives there. And for clients from very, very large organizations that talk about bringing up the web app at a board meeting with their board and saying, this is what we're looking at, this is what we like, this is what we want to do. So really kind of bringing all that. And then last but not least, which was pretty exciting a year ago, I think will be even more exciting a year from now, is we're pretty bullish on the whole flexible space market.
Mm-hmm.
We bought PivotDesk, I guess a little more than 2 years ago. PivotDesk, you can think of like an Airbnb for office space. I have 5,000 square feet. I'm not using 10 of those desks. You can put them on PivotDesk and kind of monetize in the short term. And we have a program called Flex by SquareFoot, where we partner with landlords and clients to help bring lease flexibility to the transaction as well.
So it's kind of like a sublease, except they're not having to sign anything long term. It can be, a couple days or a couple weeks.
Yeah. Well, it's usually kind of, I guess we'll call midterm. Like we wouldn't do anything for less than a year. We were originally going to be doing those on balance sheet, but then COVID happened. So now we're doing those on management agreements, which is a lot better for everybody. But 2 years ago, nobody wanted to do management agreements. So we weren't doing management agreements.
What's a what's a management agreement?
Got it. Yeah. So there's the landlord or the tenant. And historically what happened, we would show a tenant a space and they'd say, this is perfect, but I want 2 years. The landlord says, that's great. We do 5-year deals here. And we heard that enough times and we got tired of telling everybody no. So we said, why don't we try and solve this problem? And the way that we were going to do that was we say, great, we'll sign the 5-year term. We know that the tenant's happy to pay a premium for shorter term. So we were going to do that. And we were in kind of an enviable position because of the platform to know who's looking for what where. So we know where demand is and how much they're all willing to pay, which means we're able to underwrite those deals pretty appropriately. Also, because we have that platform, we're in front of all that inbound demand so that we didn't lose much sleep if we, quote, bought right, knowing that in month 25 that we'd be able to backfill it.
Right.
And was actually a decent part of our fundraising story when we went out to the market last year. It resonated well, and we were going to do a whole bunch of that this year. Then COVID happened, and I'm not signing leases because nobody knows where the market is, and I'm not about to be the one guessing. Because for us, it was never a core business for us. It was, hey, we have clients who are looking for solutions that they can't find. And when we hear that enough, we say, great, can we build a solution for that? So that's where Flex came in. And then now we partner with landlords to that on a management basis, where management meaning the original scenario, we were going to be signing those leases. Now we don't sign those leases, but we can still help get the space turnkey ready so that a client can move in for a 2-year term. And we just won't sign. We're not going to be involved in that transaction. We're not going to be holding that lease anymore.
So is the landlord just now willing to take a 2-year lease? Like what's
right
the
Yeah. Oh, yeah. So now landlords are a lot more flexible. I mean, still, we don't have many transactions happening. Not we at SquareFoot, but like in the market is still in an interesting place right now. But yeah, landlords, especially like the average mom and pop landlord, or even like, I own 10 buildings. I'm not very institutional. I'm not in the operations business. I buy a building and then I sign a bunch of 5 and 10-year leases. And then I worry about them in years 4 and 9 respectively. I don't want to deal with furniture. I don't want to deal with internet. And I don't want to deal with in and out. So we can come in and solve all of those things programmatically for a landlord.
Got it.
And we had already built everything to be able to do that because originally we were going to do that and then sign the lease. So we were all geared up to do that. And it actually wasn't much of a pivot's the wrong word here, but wasn't much of a change of direction to just say, great, we're not going to be in the principal position, which makes the economics look different too, right? Lower risk, lower return, which is fine. It works out better for everybody, actually. It's the way it should be done.
Yeah. So if I own like a 10-story building, I might go to you and say, hey, I'll sign a management agreement with you for floor 9, and y'all are more than welcome to kind of lease this floor however you see fit for tenants that need shorter term leases or more flexible outcomes.
Yeah, that's exactly right. And I would still tell you as the landlord to continue marketing it as you normally would. And then whoever finds the tenant first does the deal.
Got it.
And you still have full visibility into the tenants I bring in. So like you don't want a brothel in your building, you still won't get the brothel in your building.
Who doesn't want a brothel in their building?
It's amazing. Well, in New York City, Trinity Church, which is like a portion of the Catholic Church, usually frowns upon it, and they own a ton of buildings.
That makes sense. So do you have like a target customer? Is it smaller tenants looking for flexible space, or do you deal with people looking for 500,000 square foot leases?
Not 500,000, but kind of 0 to 50 is our bread and butter. We've done deals for subsidiaries of GE, and we've also done deals for Powers and Wasserstrum Associates, like the local accounting firm. The thing that we've always talked about is if you think about who uses Zillow, it's both like the two dudes out of college looking for their 2-bedroom apartment downtown, and it's also the family buying a $10 million mansion. And we see the same thing here for the most part. Goldman Sachs is not looking for the next headquarters space on square foot, but there are companies that you would know and love who are looking for 10, 20, 30,000 square feet all day on square foot. And then also the kind of 2-person and 10-person firms.
And is that target market typically in the market looking to lease within like a year of their search? Is it within 3 months of their search, or kind of everything in between?
Yeah, good question. Everything in between. It scales up based on the size. Like somebody who's looking for 20,000 square feet is usually not like, holy shit, I think I need space tomorrow. So usually have kind of like a 6 or 12 month cycle there. But then you and I decide to go get venture funding and take Powers and Wasserstrum to be a bigger business. And now we're looking for space on Tuesday. And we have solutions up and down the board.
So I'm a tenant, and then I'm in the market. I've gone to SquareFoot. Y'all have captured my contact information, what I'm looking for, and then that feeds directly into your broker network, who's able to contact them immediately and start working with them to nail down a space.
Yeah, that's exactly right.
Well, let's talk a little bit about kind of what you're seeing right now. Y'all are only in New York City right now, or y'all in more markets?
So the platform is live everywhere. The only place where we have brokers who wear our shirts today is New York City. We'll be launching somewhere between 2 and 3 new markets this quarter.
Okay.
But we already get demand. We've done deals in most of the top 20, 30 markets already.
So you just have partnerships in those markets?
Yeah. And then because our plan was always not always, but there was a strategic decision that we made a couple of years ago. Do you want to go broad or deep? And we said, let's go deep and then we'll go broad. And so New York City for us has always been kind of this laboratory. We get to try new products, new services here, actually just figuring out the business, quite frankly. Like what's the right way to follow up with clients? What's the right touch points, email, phone call, text, chat, whatever. And then once you get that well-oiled machine going, then you start going and you can just kind of drop that into new markets, which we had planned on doing last year, which because of COVID got delayed a little bit, and we'll be doing out in the next coming weeks.
Well, New York gets a lot of the headlines. Can you just speak a little bit? What's the office environment like there right now? Is it as bad as it seems? Is it better than it seems? Like, how do you think about it?
I don't read enough news to know what the headlines say, but we live in the suburbs now, and every time I go into the city, I go in the city 2 or 3 times a week for work. Each time I'm on the train, there's more people. But when I would go to the city, like we just had our first kid in May, and we did some doctor's appointments in the city, like March, April, it was a ghost town. Like you could drive like through, like up and down the island of Manhattan, and like streets were empty. And streets aren't empty now. But it's nothing like, we're having this conversation a year from now, the streets are packed. So I'm sure it's not as bad as people are saying, especially like the news's job is to be sensational. So everybody clicks and says, holy shit, New York's exploded. But it's also not, I'd be lying if I said, look, 2020 was not our best year in business.
For sure. So what's the office activity like? Is it starting to pick back up? Was it on pause for March and through May, or how do you see the market?
Yeah. So actually both. It is starting to pick up. Again, not like what we saw this time last year, but a far cry from where we were in March. Kind of we'll talk about it like in stages, like March, 15th, everybody just got out of the pool, right? Nobody knew what was happening. Everybody kind of hibernated for the right reasons, which is like nobody knew what we were dealing with. So all the searches that were in process got put on hold. A couple that were like at the finish line got over it, but almost everybody said, yeah, we got to figure out what's happening. Things were pretty quiet for the spring into early summer. And then over the summer, people started talking about, our clients started talking about, great, how do we get back to the office, right? Like Labor Day was always this kind of line in the sand. We told people they could go wherever they wanted to for the summer. But now we want to start getting people back in the office. So we started doing nothing we charged for, but like kind of consulting on like back to work strategies. How do you do that safely? And now people both are doing that and now talking about, great, I need to figure out how do we go sign a new lease because either our lease was up or because we're growing or because we have too much space and we need to contract. We actually closed by number of deals in Q4. I mean, it was up a lot from Q3, up a lot from Q2, but again, not where Q4 of 2019 was.
Right. Are you seeing any data? Are people moving to New York, like first time arriving to New York, or is it a lot of just folks just moving around the city or expanding or getting smaller?
It's both. I know. I mean, look, people who would have been setting up satellite offices are still setting up satellite offices. I don't think New York's going anywhere. Sorry, I'll go a step further. I know that New York's not going anywhere. I know that in the middle of a pandemic, if I'm a 27-year-old kid, I have no reason to be paying $3,000 a month to not be able to go to the bar till 3 a.m. So I'm going home. I'm doing something other than paying $3,000 a month. By the way, I don't have to go to the office. So like, why am I living in my shoebox? As soon as that passes, the same I don't remember how old I said I was at the time, but that same person's coming right back to the East Village.
Yeah. Take me through the journey a little bit of raising capital for this business. You've raised quite a bit and what it's like to work with VCs.
It sucks. The first part sucks. Raising capital sucks. Working with VCs is fine. Is good. You get capital, you get advice, all that stuff. But yeah, raising and also like, look, we were doing this before. I think it was our buddies at PropTech at MetaProp started calling PropTech. But I mean, Zach Aarons was one of our angel investors before MetaProp existed. Like PropTech wasn't a word when we were doing this, which meant when we were going to VCs talking about doing this thing in commercial real estate, they're like, dude, what are you talking about? And because if you think about the average VC, especially, is not struggle with the office space search. VCs get emails from brokers all day saying, hey, I'd love to help you, which is not altruistic. It's a broker trying to get in with that VC because they want to help their portfolio companies. So it's a problem that the VCs haven't really lived. And historically, I mean, going back to like we were having these conversations in 2012, real estate as an asset class wasn't something that VCs were spending much time in. I mean, sure, you had like LoopNet, which was venture backed in the 90s. Zillow, obviously, on the residential side. I mean, surely RealPage was already around there, but like it's a pretty short list. That's changed a ton in the last 8 years, which has been fun both for us as SquareFoot and then now with my like nights and weekends hobby.
Which we're going to get into that.
Yeah. But yeah, it was not easy. 2012. We did our first institutional round coming out of that accelerator, quote, institutional being, angel round. We raised like $430,000, which at the time was a ton. It was like the right size for an angel round at the time too. By the way, that took us till the end of 14 when we raised $1.5 million from, VC. And then we've done that 2 or 3 times since then. And it's never fun. I mean, if anybody tells you that they enjoy fundraising, they're lying to you. Or they're masochistic, or both.
Yeah. Is it not fun because it takes you away from your core business, which is leasing office? Or is it just the hundreds of meetings you have to have? Or like, why isn't it fun?
Both of those, right? So it takes you away from your day. Like when you start a company, you're like, great, I want to go fix commercial real estate leasing. And you're not like, what I really want to do is spend a third of my life fundraising, which is what it winds up being. Now, granted, like, the ends justify the means, right? So you have to now spend a third of your life fundraising. So you do that. But fundraising, you hear no a lot. And there's no way that if you aren't a sociopath, that doesn't impact you.
Yeah.
Even if it's part of the game. It's just like dating. Like, I didn't marry the first girl I went on a date with. And I was told no a whole bunch of times, both by her and by other women before that. But it worked out.
I love it. Hey, guess what? The sociopath. Guess what happened today? I got told no by 10 VCs. It was great.
It was so awesome. You guys got to try this, man. I'm like hanging out with my business school buddies, and they're like, they have real jobs. They don't have 6 roommates. And they're like, oh, what'd you do? And I was like, yeah, I just got rejected like 6 times. It was awesome.
How critical is it that when you have that meeting that you think is going to be the VC or you think it's going well to kind of keep that momentum? And how many times did you feel like that was happening and then it ended in a no? You know what I'm trying to say?
Yeah. I mean, all of them. I mean, I think I'm super charming. So I think all the meetings go great until you get the email that said, we'll be rooting from you from the sidelines, or whatever VCs like to say. Let's just be friends. I hope I'm wrong. Prove me wrong.
And you've raised how many rounds now?
Like 4.
Okay. So you've had your fair share of meetings.
Yeah.
How many VCs are there in the country that would actually, you might know that none, is there hundreds of potential VCs for your firm, or is it 50 or 20?
I mean, by now, you probably have 10 prop tech specific VCs, which is amazing to think about. And not every firm, but majority of the other firms will look at it now. So yeah, there are clearly 100. I mean, I'm sure for when we did our Series B last year, I'm sure we talked to 100 firms.
Yep.
I mean, including both 100 people, both, because we do pretty well raising from real estate executives. So I'm sure we talked to 100 people, including both kind of those real estate execs as well as the firms when we did our B last year. Pivoting
back just a little bit more just on office, what's your thought of office going forward? You mentioned buying PivotDesk, and what's the market saying? How is office maybe going to be different, and how's it going to be the same?
And that's a fun question. So look, I don't think remote's the future, at least how a lot of people are talking about remote. If you want to talk about maybe the ironic thing, you want to talk about remote being, you have some people who don't work at HQ. We've had an office in Belfast for 3 or 4 years, and we have now 5 or 6, 7 people there. That's kind of fluctuated up to like 10. Now it's about 5 or 6, 7. Guess where they work? In an office. So it's remote, but they're not in their pajamas. I mean, now they are because UK is on lockdown. So the notion of companies to be competitive should be looking for talent anywhere. So that makes you remote. I don't believe that most talent wants to work on their couch, which means you need offices. And what that office looks like might change, right? Because if you actually start having more people not in HQ than in HQ, do you have a bunch of WeWorks, or do you have, I think you'll start having, close, I guess we're investing in it now too, this company called HQ2, actually ex-WeWork guys who are doing, I'm going to butcher this so badly and they're going to kill me, but we'll call it near site co-working. So I'm in the suburbs and they'll build a retail location in the downtown. There's 2 blocks of downtown in the town I'm in. And there's a place so I can leave my house, but not go all the way to the city. And I think you'll see a bunch of that.
I couldn't agree with you more, but it's happening in an office.
For sure. Yeah. And by the way, the people who were already working out of Starbucks will continue to work out of Starbucks. That's always been an option. And by the way, that's why part of WeWork was a really good business. Or all of WeWork was really good business on the office side. That co-working thing was a very real need. And people were very happy to pay $500 a month to not work in a Starbucks. And that's not going to change.
I don't expect you to have an answer to this, but it's just something that I just thought about. You don't think there's a world where there's Airbnb for the home office? So I would lease a bedroom out in my house to somebody that's going to show up every day and just use it as an office.
So there's nothing too dumb to ask, or not dumb at all, but I've seen at least 2 companies that do that already.
Oh, really?
Yeah.
Okay. Well,
it makes sense because I think it's all the same thing, especially in a dense market where, especially for the freelancer community, I might not want to go to WeWork. There might not be a WeWork in my part of town because I'm in a residential part of town, but the guy down the block has an extra 3 bedrooms that he's not using. And he rents them out. I don't know if they're daily, weekly, monthly, whatever. And that's my office.
It's hey, I'm going to work all day. My house is going to be vacant all day. You just lease my, office while I'm at work, and you got to be out by 5.
Yeah. Or maybe they're there too. I don't know. One of the reasons why offices I don't think are going anywhere is I think people like seeing and being around people.
Yep.
When I was in college, when I was in business school, where you went to study a lot of the time was the library, because you don't want to just sit in your dorm room all day.
For sure. I'm convinced not everybody, this is a nuanced statement, I'm not casting a blanket, but if you genuinely love working from home, I think there's something to be said that you might just not like where you work, period. People that love their companies and love where they work, like more and more, I'm finding that they are craving being back in the office.
Yeah, whatever I say is going to be biased, but yes.
Yes. Imagine being a 22-year-old kid that gets out of college and needs mentorship and needs to learn business lingo and how meetings happen and how deals work. And you're like, yep, you're going to be sitting in your bedroom for the next couple of years and we're going to do all that through Zoom. Like, it just does not work.
Dude, and separate from that, like when I was living in DC, I lived in a 6-bedroom house with buddies from college. It's separate from the fact that like they weren't going to mentor me. I don't think I could imagine a much less conducive place to try and work for 60 hours a week than like at our beer pong table.
And the Zoom happy hour, company happy hours are the worst.
And look, and I don't disagree, but like the technology around that will get better.
Yep.
And it still won't be as good as 10 people in the conference room hanging out, having a beer or a salty snack after work.
How do you find new customers?
They come to us, man.
Like
power of the internet.
Yep. Do y'all do, I guess, just through SEO and ads and things like that?
I bet this is always not fun to do the live demos, but I bet if we Google Dallas office space right now, we're on the first page.
I will do it right now just to confirm for all of our listeners. Dallas office space.
And I'm doing it here too. I wonder what we get.
We got work suites, city feet.
Don't look at the paid ones.
Oh, yeah. Oh, there it is. Yep, right there. It's the first one that's not paid. Maybe the third one.
Yeah.
That's awesome. Okay.
But that's for a market that we don't play much in. And when we play in a market, Google like Chelsea office space.
Okay. Chelsea office space. And you
should be number one, both paid and organic, I would bet.
Yeah.
Actually, might not pay a number one spot, but we will show up paid and we will be number one organic.
Love it. So what's the goal? To go deep and then go wide and continue the mission is to be the best place that tenants 0 to 50,000 feet find office space. Yeah,
like growing companies struggle as relates to finding, transacting, and occupying real estate. And we will continue solving all of those pain points for them. New products, new services, and then taking our show on the road and doing that in new markets.
And are the brokers that you're hiring, are they typically coming from a big shop like CBRE or JLL, or are you training people from the ground up?
Yeah, both. Historically, actually, we only did the training thing. We were like, I don't think we were wrong in doing this. I think what we're doing now makes more sense, which is obviously why we're doing it now. But we always said like the hard part is getting the deal, not closing the deal.
Mm-hmm.
And that is true, but you still want somebody who's been around the block before closing the deal. So we started just hiring really junior people. And then we had guys like a year out of college that were like running around town with 10,000 square foot clients. We said, how we'd probably close more of those deals is if we put somebody with 15 years of experience on that. So we've actually made a push starting middle of 19 and then a bunch last year, hiring those kind of 10 to 40 year execs, not age, but like years in the business. We've been pretty successful with that here in New York. And then as we talk about launching these new markets, it's actually on the back of hiring a broker or brokerage or a team to help us plant that flag. And we're not talking to kids just 2 years out of college.
Right. For that. And your pitch to somebody that's a successful broker already is, we can provide you more volume and more deals, or why would I leave CBRE to go over there?
Yeah, the one line I use, if I can only use one line, is, do you want to be part of the future or part of the past? Especially if we talk to somebody who's like about our age, plus or minus 5 or 10 years, somebody wants to be in the business for a bunch longer, and they know that I won't negative sell any of the big firms or any small firms, but like they're doing stuff the same way when I was there 15 years ago. And the clients aren't, by the way.
Yep.
But the firms are. So this gives them opportunity to help be a part of that and help build that and have a front row seat with that. We'll also give you some leads. We'll also give you tech tools that make your life better and the client's life better. But if it comes down to like one bumper sticker, it's part of the future, part of the past.
Can you speak to some of the tech tools, maybe one or two that you provide your brokers that give them better weapons to go to war with?
Yeah. So it's both from a tech perspective and also from a service perspective, service line perspective. Like we have PivotDesk, nobody else does. We have Flex by SquareFoot, nobody else does. Because all you care about ultimately as a broker is how do I close more business? So either give me more business to close or help me win more business. And we do both those things. And then from a tech tool perspective, there's a mobile app, there's a desktop app, and they all talk to each other and you talk to your clients through that. And it's just a much more seamless experience than like you run a report in some database that everybody knows. And then you have to go talk to the marketing team about putting a book together. And then that book gets printed out. And then you're walking around town with that piece of paper in your hand, and your clients walking around town with a piece of paper in your hand, and everybody's taking notes and some people are taking pictures. And how do you kind of centralize all of that? And by the way, let's say your client's here, but her partner's in San Francisco. How does she share all of that? Well, the answer is all that happens with SquareFoot and none of that happens anywhere else.
I love it. If you are a team or you're a broker in one of these markets, they are coming for you. You are next. All right.
And just come to me. We're hiring everywhere you are right now.
And at the end, I'm going to ask you how do people get in touch with you. So your email will be blowing up for the next 6 months. You have no idea.
Hope so. If it's anything like your Twitter following, it will be highly engaged.
Take me just real quick through buying PivotDesk. How did that whole thing take place? Was that the first time you've actually outright bought another company?
Yeah, that was interesting. So I had long admired what they were doing. Became pretty good friends actually with David, who used to run it. And I guess they struggled to raise capital end of 2016. And I actually remember having lunch with David. Hope he doesn't get mad at me for telling this. And like, I thought they were like about to be done raising capital and then they were going to go take over the world. And then like 4 months later, he's not like a good buddy, but like, we catch up. I read that Industrious bought PivotDesk. And I was like, holy shit, what? I thought you guys were just raising. And he said, yeah, unfortunately, it didn't go how we wanted to go. And we had to do this like last second thing. I was like, David, where was my call, man? He said, oh, I should have thought about you, but it was all okay, whatever. So anyway, Industrious bought it. And Industrious wasn't doing anything with it. So I called Jamie at Industrious and I said, hey, what are you guys doing with that? And he says, yeah, not much. And I said, can I have it? He says, you can't have it, but I'll sell it to you. And that's how we bought PivotDesk.
How long did it take from that call to close?
It was actually like Jamie and the team over there are great. I actually had to convince them to do it because it arguably like wasn't worth their time to do it. They have much bigger fish to fry than like, we have this thing that nobody's using and Jonathan wants it. So it took a little bit of cajoling. Like I chased him for a while, say, hey, Jamie, let's do this. And finally said, fine, just stop emailing me. And then from that point to close was pretty easy. It's probably a month or so.
Love it. All right. We've talked about SquareFoot. I love what you're doing there. And you mentioned as we were chatting that you have a nighttime hobby. And that's another way that we connected. You have you're one of the larger syndicates on AngelList, and you have a rolling fund. Let's talk about that for a bit. You invest as well.
Yes, it's a hobby and addiction. I don't know what we call it, but it keeps me sane and smart. It makes me much better in my day job.
Let's start with the question that I asked you, which is just give a 2-minute description of how a rolling fund works.
So yeah, the rolling fund each quarter is its own essentially fund, and the LPs who are investors in that fund and the investments that we do out of that quarter, that's all a thing. And then it gets put on the shelf at the end of the quarter, and the next quarter starts new LP base, a lot of overlap quarter to quarter, but essentially it's a new fund and new set of deals, and then wash, rinse, repeat. And because of how they've structured AngelList, I'm able to publicly solicit, not just me, but anybody who has one of these. I can actually talk about it. Like I'm fundraising, and anybody who's interested in prop tech should call me. And I think that was actually one of the big novel things that they brought to the table. Because, historically, if I had a fund, you're not allowed to talk about it publicly. And then let's say you and I had a conversation next week after the fund closed and you said, oh, Jonathan, that's really cool what you're working on. Love to get involved. I'd say, oh, that's cool. Well, we'll be raising again in 2 years, which is like the typical fund life cycle. Here, I can do it constantly.
So I might come to you and say, hey, I'm in for 100K and I want 20,000 of that to be allocated every quarter for the next 5 quarters.
That's exactly right.
And as an investor, I just have to put that into AngelList once, and then AngelList takes care of that money getting allocated and takes care of you not having to do all this work to make sure it gets allocated.
Yeah, that is exactly right. Yeah, so some of the LPs write that one check up front. I don't get to see any of it. And then others fund their account every quarter. Makes no difference to me.
Yep. And if, let's just say, you don't allocate all the capital that you have raised for that quarter, my allocation just rolls into whatever you do the next quarter.
Yeah, that's exactly right. So we spent, I don't even feel like doing that, call it 95% of the capital in Q4, and that other 5% shows up in the bank account for this quarter.
Yep.
So it never burns a hole in my pocket.
Do you not do the syndicates now? Because you also are one of the largest syndicators as well.
No, we still do, because it's great for me and it's great for the companies that we partner with. We actually get a ton of flexibility in that there are a bunch of deals that we do out of the fund where there's like not a nickel left of allocation. Like we literally squeeze into deals, in which case it doesn't make sense to even talk about, can we take more of it to the syndicate? There's others where, we're first commitment into the deal, especially some of this pre-seed work that we do early stage. And say, great, we're going to write X dollars from the fund. And by the way, let me take it to the syndicate and let's see how much more we can do. And we did that in about a fifth of the deals that we did last quarter. So it's super flexible for the companies that we partner with, which is great.
And the syndicate is, if you have extra allocation, you just go post a one-off investment that people can dive into.
Yeah, that's exactly right. Yeah. And also for, I still do some non-prop tech stuff. And that we don't do out of the fund, that goes to the syndicate no matter what.
How many investments have you made?
We did 20 deals out of the fund last quarter, and probably all told another 30 through the syndicate since I started a couple of years ago.
So you've done about 50?
Yeah.
That's incredible. What's your average check size?
So the fund is small checks. So we have a thesis and a strategy that is high volume, low ticket size. I believe very strongly, and it's backed up by evidence, not mine, but others, that the best performing funds over time will be concentrated in winners. The worst performing funds will be concentrated in losers. And the best chance of having a very good performing fund is to be pretty diversified. And that's what we wind up being.
What's considered a good performing fund? Like 5x your money in 10 years, 3x?
I think if you're 3x, you're a top quartile performer.
Got it. And do you want to do more of this as time goes by, or just continue the same kind of trajectory that you're on?
Look, man, I love building SquareFoot. We're just getting started, which is either sobering or exciting, as we say this kind of 9 years after we started.
Yeah.
The prop tech nights and weekends fund keeps me young, and it's super symbiotic with what I do on my day job. And getting to work with and help other companies who are earlier in their life helps me be better at my job today. So yeah, I'm not in a rush I like the balance we have now. The fund, as the fund grows, and I have no interest in getting like institutional capital. But if the fund, because of your podcast, doubles in size this quarter, it just means our average check doubles in size this quarter.
Right.
And the strategy still holds.
Right. You don't have to do necessarily more work or find more companies. You just up the check size.
Instead of $1 a company, we're now $2 a company.
Yep. If you're looking for $2 of venture capital, Jonathan's got you covered. All right. We're going to move just to some personal questions, and then we'll bring her home. Do you have a childhood experience that you remember vividly that has shaped who you are today? An example might be, we've had somebody say, when my parents got a divorce, my life kind of changed, or being part of Eagle Scouts and Cub Scouts made me who I am today. Like, is there something you did as a kid that kind of put you on the trajectory that you're on, or something that you remember?
Yeah, I guess when I started high school, I wasn't the most studious of kids. And I was also like super involved in extra, like I played both for my high school soccer team as well as like we call them traveling teams. I don't know what they're called now. So I had like a bunch of extracurriculars. I was in a youth group too. And my studies, I wasn't doing like amazing in school. And must have been like sophomore year. And my parents said, or somebody said like, where do you want to go to college? And I don't know why. At the time I said I wanted to go to Brown. I think maybe I just saw Varsity Blues and that's where he was going. Surely not why, but whatever reason. And my parents like, you should probably go talk to the college counselor. And they're like, yeah, there's no way you can go to Brown with these grades. And I wasn't like a C or F student, but like it wasn't with the grades that you would need. And that was probably a bit of like, wake up call is like probably the wrong word, but like it got my act together. Yeah. Stopped one of the soccer teams and I spent more time on my studies. And I was able to get into schools I wanted to get into. And it showed kind of, I guess I haven't tried to come up with a life lesson out of it, but it shows like, balance is important and you have to like put your time in.
Yep. No, I love it. You have a book, or whether personal or business, that you has helped push you forward?
Kind of like Danny Meyer's book, Setting the Table, which is about like, he's like a big restaurateur and he's all about hospitality. And he's got some great like little things about like looking under the rocks, because that's where you can learn a bunch of stuff. So like looking where you're not expecting to find answers, which is actually not what that means, but looking under the rocks, which is what he calls it, like that. And then probably sound like I don't know, dork or somebody who uses Twitter too much, but like I like a bunch of like the Stoic books. What's like Marcus Aurelius, which is like a bunch of stuff about like there's a lot of stuff that happens around you that you can't control, but you can control how you feel and react to it.
Yep.
Which I've not always been good at, but I've done some more of reading that last couple of years, and I think it's been pretty healthy for my mental health.
Yep. There's probably a lot of people that could read that book.
A lot of people could read a lot of books they don't read.
Yep. If you had a billboard on the busiest highway or intersection in New York City that you owned, and you could put a message on that billboard for the world to see, what would you put on that billboard? Besides lease office in New York City.
Work hard and play nice.
I love it. All right. What's the best way for people to get in contact with you and SquareFoot and your syndicate rolling fund?
SquareFoot is SquareFoot.com. PivotDesk, PivotDesk.com. Me, I'm super responsive on LinkedIn. Jonathan Wasserstrum is the same name there. Twitter, I started using a lot more, which has been fun. JM Was. In my Twitter bio, there's a link to the Rolling Fund stuff, or reach out to me on LinkedIn and happy to talk about that or the syndicate anytime.
Awesome, man. Thank you so much for taking some time to chat with me today. This was awesome conversation.
Anytime. Much appreciated.
Hey everyone, it's Chris here again. Thank you so much for joining me on this journey. If you enjoyed the show, please subscribe to us on Apple Podcasts, leave a 5-star rating, or write a quick review. Thanks again, and I'll see you on the next episode.
Chris Powers is the founder and CEO of Fort Capital LP. All opinions from Chris and guests of the Fort podcast are solely their own and do not reflect the opinions of Fort Capital LP. This podcast is for informational purposes only and should not be relied upon for real estate or investment decisions. The Fort with Chris Powers is produced by Straight Up Podcasts.